In Hawaii there's so much to do. There's hula, there's surfing and real estate too. We're just two local guys with so much to say. So listen to the Real Estate Braddahs today.
All right, welcome everybody. I put in this slide here because we just want to do a free giveaway. The Easter egg is a net worth tracker sheet that I created this past week. It has a cool tool where you can put in how much money you have, what's your anticipated interest rate, and how much money you're anticipated to save. And you can kind of track, maybe if you're growing your money at 5%, 10%, 15%, how it grows over the years. You can download that at SimplePassiveCashflow.com/legacy. But let's get into it. This is episode 28, June 2020 monthly market update. What are we going to talk about here today, Dean? What's some of the highlights?
Yeah, starting off with some positivity, with all this negative stuff. I thought we're over the COVID hump for some areas of the states, Hawaii being one of them, but then we have the Floyd issue and the riots going on. So I wanted to start off with some positivity. I got some early May stats, even though HBR didn't come with their official numbers. So I have found a different way to pull those. So we'll talk about that. Zoom in the news again and talking about the new normal. Some of the things I wanted to talk about. Lane, I can't see the screen though right now. Is it? I know you can apparently, but I can't see the screen. Is it? Am I in the wrong view? Thanks for everybody's patience. Yeah, my name is Dean Ueda. I'm a retired CPA, full-time realtor now, and investor. Lane and I've been doing this for 28 episodes now, Lane. So coming to you again as a full-time realtor with a lot of information on Hawaii real estate as well as trends going on the mainland. So as I mentioned earlier, I wanted to start off with some positivity with all this new negativity going on in the news. I wanted to come up with I'm not too sure if you folks are familiar with John Krasinski's Some Good News, or SGN. It's a YouTube channel that he's come up with 8 episodes so far, and everything on it is very positive, things going in the world. And so far, 8 episodes, but what I've most recently heard, maybe not good news, but he's actually sold this Some Good News brand over to CBS, I think, because he can't maintain it. For those of you who know who John Krasinski is, he was Jim on The Office, and also on Amazon Prime, he's the Jack Ryan. So apparently that's starting up filming again, so he can't do that. But I watched the 8 episodes of Some Good News, and it was basically started because of the coronavirus, and he was filming it from home, and I believe it's self-produced. But watching some of the episodes, it's really great, and I suggest if you need some positivity in your life, tune into Some Good News on YouTube. Also, a few websites that I found looking for more positivity on the web, since all of us are on the web these days. goodnewsnetwork.org and also www.positive.news are also 2 sites that you can go to fill yourself with some good stuff.
What is one way that you've been more positive this month?
And great question. So there's your picture there, Lane. I think it got cut off.
You didn't go too far to get that one, huh?
Well, there was a word, it said gratitude above that, and so. And I've talked about it. Oh, there you go. We have a transition. But I've been trying to wake up every morning and come with the mindset of gratitude. So I wake up in the morning and tell myself something that I'm grateful for. And so I'm part-time homeschooling my children, and I actually did that 2 days ago. Right after breakfast, I asked the children, my kids, 8 and 6-year-olds, to let me know 2 things that they're grateful for, and I'm trying to bring that mindset of gratitude and pass it on to them. So what I put your picture there, Lane, is because I don't think I've ever said this to you. Sounds really corny, but I'll risk it and say, I'm grateful for you. I know we don't talk so much these days, but when I do, and when I am able to get you on the phone or on a Zoom meetup, I really am grateful for the chats that we have. We both don't think alike, and that's great because they tell you should be thinking out of the box, right? And a lot of times my mind is that box. So when I talk to someone who doesn't think like me, like you, who's a good thinker also, you put these ideas in my mind that are outside of my normal way of thinking. So that's a good way for me to think out of the proverbial box, if you will. So, but yeah, to your question, Lane, yeah, I am trying to come up with a lot of gratitude these days, especially in the current day and time. Yeah. So
Well, I appreciate that.
thank you.
I don't come from a family where we express our emotions, so
Yeah.
I'm grateful for you too.
Thank you.
Oh, I got another idea outside the box.
Okay.
So tell your kids, write down what they're thankful for
Okay.
on a little piece of paper, kind of like a fortune cookie, and then throw it all into a bowl. And then once in a while, like fish out of that bowl one thing.
Mhm.
And then they got to go like, I don't know, like 4 hours or a day or two without it.
Oh, interesting. That's a good one. I like that.
They
So
might
don't
think
take it
it's
for granted.
Yeah, they might think that's a horrible game.
As you got to make sure they don't know what happens during the game before they write everything down. If not, they might juice it and put stuff that.
Yeah, put lame stuff in there, right?
Yeah. Okay, so jumping into the statistics for May 2020. So keep in mind, Honolulu Realtors statistics for me aren't going to come out for another 2 days. So I figured out another way to pull it. This is via InfoSparks. And so these numbers may differ from what you hear in the next 2 days that comes out from HBR, but they'll probably be pretty close. And at least the arrows, for the most part, I think the trends in overall will be same, if not very similar. Starting off with single family, we see actually a jump up of 4% in median single family prices at 797,000. We see a reduction in closed sales of 23% and 244. For median days on market, we see a 41% decrease down to 13 days. I think this number will differ from what we get from HBR. I think by maybe 5 or 10 days. And then new listings for single family, we see a big drop of 38% at 348 listings coming up in May. So for condo and townhouses, we see a slight drop of 4% at 399,500. We see a big decrease in closed sales, no surprise, at 256. Median days on market at 23, which is a 15% reduction from the point, again, that it's listed to the point that it goes into escrow. And then for new listings, we also see a decrease of 29% at 526 new listings for condos. So interesting stuff. I mean, we still seeing the median single family price go up slightly. Safe to say it's kind of what we expected in terms of closed sales going down so much for both single family and condos. But I don't know if you want to call it the X factor is when we're looking at these new listings, because those are also on going down. That's going to be interesting. And, where everyone's talking about the current state and what's going to happen. And, in the short term, the majority is saying that, the real estate market's going to soften a little bit in the short term. And the question is, how much? So the next slide is going to be talking about how we will potentially maintain our prices or stabilize the softness in the next short term. So Oahu single family month supply on inventory, that's still going down for single family. Look, and for month of May, it's 2.6 months. So I don't know if you remember, we talked about this in the past. The general rule of thumb is, around 6 months of inventory is what we consider an equilibrium. Anything below would be a seller's market. Anything above would be a buyer's market. So because even though closed sales are going down, so are the new inventory coming on market. So buyers are getting skittish, but so are the sellers. They're able to hold off before they're putting things on market. So we see that for single family. On the next slide, we see for condos and townhomes, it's a little bit different. We see on Oahu, anyway, the condo month supply is actually going up, and it's getting closer to, if you want to use that 6 months as equilibrium, but 4.7 months is what's showing up for our InfoSparks. Again, keep in mind it's going to be slightly different than what Honolulu Realtors is going to report, but it'll be pretty close. And so what's driving these months supply going down? or what's the driver, and part of it again is this new listings. So if you look at single family homes new listings in May at 348, and you look at that, that's what's driving the months of inventory staying low. And that also might be the reason why the prices slightly shot up. Yeah. So hopefully, my point is that the months of inventory is something I'm going to watch, as well as new listings, to see, how much impact COVID is going to have on the local real estate market. Yeah. And so same thing for condos. Yeah, we see a slight uptick, 526 for May. And the interesting thing is, this is not unique to Oahu. I've been hearing this across the mainland in terms of residential. Again, real estate is local, so everywhere will be different. But I've heard that from various people, residential as well as commercial, where inventory is staying relatively low, and that's kind of what's being able to hold up the prices. So, and I'm not trying to give a false positive or anything, but I'm just kind of giving you that insight in terms of that. So good and bad. Some notes that I just want to wrote down is that there are still people right now who are ready, willing, and able to buy and sell real estate, albeit they're people that are putting things on hold or are forced to, based on their job situation or whatnot. One thing that is also helping us is interest rates are at all-time lows, and it's actually forecasted to be potentially get even lower. I think most recent quote I heard earlier this week was 3.25 for the 30-year conventional. And what people are saying is that, based on the Fed rates being at what they are, we should actually be seeing something like in the high twos. And I think we talked about it last time in terms of why is it that it seems like it should be lower, but a lot of it is driven by the retail side because of the demand for either refis and or purchases. Yeah. So another thing is we're thinking the federal stimulus, CARES Act, all of the federal funds flowing in is helping right now. And if you look at the stock market, it's a trip. I mean, I think the low bottom out on March 23rd. And now since then, if you see on this graph, that March 23rd is at that bottom. And ever since then, it's kind of been on a steady uptick, which is kind of a mystery to me. I'm waiting for that next correction. I don't know about you, Lane, but it's throwing me off. And but it's a good thing. I mean, we see the ups and downs. So if you're a day trader, I mean, it's great for you guys. I just don't know how to play that game right now. That's some of my perspective, and I wanted to bring it back down. And I don't want to be or come off as an optimist all the time. So I actually found an article on the next side talking from UHERO, which is the economic research organization of the University of Hawaii. So that's the economic think tank for UH. And in just recently, May 28th, they came out with a report for the titled "Battered by COVID-19, Hawaii Begins to Reopen." So overall, there's a whole bunch of statistics that come out on it. And if you want a copy, ping me at dinuet@gmail.com. I can send it to you. But in a nutshell, they come up with a pessimistic scenario and an optimistic scenario. So basically, on the pessimistic side, they're saying for 2020, real income is going to decline by more than 6%. Non-farm payrolls will be down 20%, and job counts will still be at 58,000 below its pre-crisis levels in 2022, and unemployment will remain at 9%. And then, that sounds not so good, but the optimistic side it sounds better, but not much from the standpoint of, they're saying businesses catering to the local market would recover by 80 to 85% from the recent decline. 2/3 of job losses would be recovered in the next year. And hopefully visitor numbers would fall short of 2019 levels for the next 5 years. So it doesn't sound very good either, and it doesn't really translate to real estate. But what I wanted to point out is, there's two sides of every coin, and this is the kind of the not so good story. And like I said, UHERO is a great entity that puts out non-biased information. So I like to pay attention to what they have to say.
Well, people aren't working, right? No tourism.
You drive through Waikiki these days, and that's kind of scary. One good thing though, I was driving home today I had a showing out in Hawaii Kai, and it was at 4:30. I was coming through Pro City, and I ran into some traffic, and I was like, at first I was like, oh man, wait, traffic already? Then it dawned on me, I was like, hey, you know what? I'm fortunate to be sitting in traffic. It sounds weird, but I told myself I'm fortunate to be sitting in traffic, because that means hopefully these people were coming from work, and all these people are working. So I wish upon everyone to be stuck in traffic during rush hour. Again, a positive spin on something negative, right? That's what we need today. So, which takes me to the next point. We talked about Zoom a bunch of times in the last few episodes. So, needless to say, we need to talk about it again. And it's another negative thing, but basically beware of scams via email. So, apparently, there's emails going out for you to upgrade your Zoom software. So an email will come out and tell you, oh, you click and run this file so that you can get the latest Zoom app update. And it's actually a remote access Trojan that's going to not take over your computer, but it's going to record all of your keystrokes so that it can get your passwords for later. So please be aware of this scam that Zoom is. Not Zoom, but these scammers are coming up to try to fool you folks. So it's a little bit different than the scams we were talking about in the past in terms of needing to set up your controls for being actually in the Zoom app.
Just use incognito mode and you'll be all right. Huh?
You know that. I don't know how much you've been thinking about this, Lane, but I was, talking to others about what's going to be this new normal. What is that going to look like? And in some of the newspaper articles I've seen, one of them was talking about Japan opening up soon. They're out of crisis mode, even though they've had some relapses, but they're talking about opening up the amusement park soon. Tokyo Disney, they have Universal in Osaka. So, but they're talking about the new safety measures that they have to have in place. So one of them that's being discussed is potentially not allowing people to scream as they're going down the roller coaster, because I guess, that could potentially pass the virus on to the people behind you, stuff like that.
You go backwards too, yeah?
Right. Oh yeah, that's true. So it can go either way. So they're talking about that. Karaoke is a big thing in Japan. So they're saying that some of the big karaoke hotspots were actually some points where they found there was a recurrence of COVID. So now they're getting new controls over that, right? And now we step back, take a look at the corporate world. More employees, as they're slowly being allowed to come back to work, some of them are getting the option to work from home full-time or part-time. And so both for the corporations and for their employees, that's going to change things in terms of, will the companies need as much office space for one? Maybe they can reduce their overhead that way. And on the flip side, homeowners or renters, looking for a new place to rent or buy, you might have different considerations, because now you may need a home office, yeah. So I know one of my good friends, she's working from home, married with one child, and they live in a condo. And so she has a setup where there's a small table, the ones from Don Quixote. And so she's sitting on the carpet on the ground with her monitor there, but not too comfortable, yeah. So it's not too conducive to work. So people in that situation, next time looking for a place, again, if renters or owners might be needing an extra nook or an extra room, maybe even for their home office, if that option is going to be allowed to them. Some things to think about. I have this picture in the middle here. I remember I told you my son is part of the Chinese lion dance team here locally. And so we recently had our head instructor, our instructor's son graduated from high school. So, no big graduation party, but we had a big convoy, and we also performed the lion dance on a flatbed truck and kind of just drove by, gave the blessing, and moved on. I don't know about you, Lane, if you've attended any of these graduation drive-bys yet.
You have to drive the car, but I'm not a big fan of.
Yeah, so I mean, all these potential changes, and what I'm missing is, the aloha hugs and kisses and the handshakes with the chest bump with your boys. I mean, that's kind of seems like it's going to be out the door for the near foreseeable future. And, here in Hawaii, that's kind of like the norm. It was the norm. I should say. So we'll see how that's gonna change, right?
Yeah, it could just be an endemic and it's just part of life, right?
Yeah, I mean, we'd be walking around in these bubbles, plastic bubbles maybe, and bumping into each other. You know, we see each other on the streets. Who knows? Should be interesting though, yeah. So my last point is mainly for the people on Oahu, but messages for everywhere. For us on Oahu, tomorrow, June 5th, is when they're gonna be allowing dine-in for the local restaurants. So, I tell everyone to please support your local eateries. The small businesses are the ones having the hardest times. I mean, big businesses too, but you think about it from the restaurant standpoint, and yeah, it's tough. So, whether it be date night, long awaited, or catching up with lost friends over drinks, or the graduation celebration that was missed out on, or the birthday, try and go out to the restaurants and support your local restaurants and businesses for that matter, because it's it's tough times right now.
All right. For those of you guys who are interested in investing on the mainland, check out my podcast, Simple Passive Cashflow, iTunes, Google Play, YouTube. I also put this on YouTube, but I also wanted to do a little bit of fun thing to break up the doom and gloom. So here's a little fun map of everybody's been watching TV. So based on every state, what is everybody watching? Apparently, here in Hawaii, we like to watch Parks and Rec. Maybe people were very upset when Chris Pratt screwed up Avengers Endgame, or not Avengers. What was that first one where they lost? He kind of screwed it up for them. But yeah, a lot of friends in California, Star Trekkies up in the Northwest. But let's get into a few teaching points to kind of begin here. And
wait, Lane, I want to hear what you've been watching.
Oh, I don't watch TV, man.
Okay.
I don't got time for that.
Okay, I gotta let me add this in. I kind of got hooked. I watched the first season of This Is Us. It's on NBC. Kind of interesting. It's called what is it called? A dramedy.
Yeah.
A lot more drama with a little bit of comedy. Are you familiar with that one?
No, I think I might have heard the name, but you know what?
Yeah.
Now that you say it, I have been watching. I mean, I like NBA videos, like the Last Dance. Like I think I saw all those videos the last like 3 years. They've been leaking them out on ESPN and YouTube.
Yeah.
But like I've been watching this, like there's just like really young Asian like kids, and they just go through all this like Reddit stuff, and it's like definitely not kid friendly, but it's like really funny. It's like an uncensored. It definitely shouldn't go on TV, but they kind of go over the highlights over like what's been going on going viral on the internet.
Oh, interesting.
Yeah, we don't watch TV, right? We watch the YouTube. Kids are all on YouTube, right? These days.
Yeah. We don't even have cable, technically.
No. So this is kind of going back to what you were talking about earlier, the supply and demand of, this is more on the national level, but in the blue here was the great financial crisis of 2008 overlaid on top of what's happening today with the, I guess they're calling this the great lockout, where you're staying at home. So what they're trying to model here is the count of unique buyers. So that in turn is how they quantify supply. So in 2008, the supply kind of dwindled down from about 80, 100 to down to the 20s over a period of quite a long time. Whereas, right now, the great lockout that we're in now, it went from like 100 down to 20 in a matter of like a few months. So very different. And what they're saying here is possibly the prices are going to kind of stay around, and because the prices are dictated by supply and demand essentially. And if your demand is kind of the same, or if your demand drops, I'm having a brain fart here, but essentially people aren't like looking, the count of buyers are dropping. So if the sellers are kind of equal, I guess things are going to stay stagnant. because I guess like the behavior here, and I'm sure you can comment on this, is, come March, April, if you were going to list your house, you probably didn't put it on the market, right? You didn't
Right.
go right into it because you want a fresh listing, right? You don't want to be days on market, 45, 60 days, because then everybody's going to think there's a stigma, something wrong with that property, right?
Yeah, spoiled. Yeah, the sellers have been spoiled. But I see I think where you're going
Yeah, because
is that
what are you doing with your listing now? Like if you had a guy in March or February, March, April wanted to list your house, or you wanted to list the house, would you hold it back till like now? Like, I don't know, what are you doing with your listings now? You holding them back?
if they can wait, we're waiting, and if they're fine without a price adjustment and we're priced what we think is priced right, then we're gonna just keep stay the course and see try to ride it out, because like I said, there are still the people that want to buy and still like are really ready, willing, and able to buy. So we are still seeing some showings right now. And as I would like to tell my sellers, it's like, you kind of weed out the tire kickers when with this COVID is what it's doing, because now you're not gonna probably call up your agent and just say, yeah, let's go window shop. So the guys in theory that are coming to the private showings are ready, willing, and able to pull the trigger. And in theory, they need to be, because on the board of realtors, for us anyway, they said that we need to be showing to pre-qualified buyers.
Yeah,
So,
just like the renters. I mean, if people are shopping around for an apartment to rent, I mean, they really need one. They're not walking around window shopping.
right. So I see what they're saying. And the point is, like you said, supply and demand. So if demand is going down and so is supply, you're at a wash, or you're at an equilibrium. So there's going to be no change until the point in time that one or the other gives. Yeah.
Yeah, the economy sucks, and then nobody has money to buy,
And people are forced to sell,
then go your buyers go.
Right. And then the inventory starts to pick up. Then right. If your supply starts to pick up, then that's gonna drop the prices. Yeah.
So you're talking a little about interest rates for those kind of new to the updates. The Fed dropped the rates back in March, but the interest rates doesn't necessarily follow the Fed fund rate. In the past, it has a lot, but recently it hasn't. If I were getting a refinance, I would wait maybe 3 to 6 weeks at least. I think it's going to go even lower, but it's already so low.
Yeah.
If you need the money, get the money. I don't know on your rentals, Dean, if you tried to do this, but I don't know. There's a lot of forbearance options for landlords and property owners, and even for people with their primary residences. That I did a little video at SimplePassiveCashflow.com/forbearance, where I actually applied for one of these things
just to test it out.
Yeah, I did it for 90 days.
I haven't done it personally. I've heard of a few people who have done it. And is it true if you can't refi until you catch up on that forbearance, or you're caught up to?
Yeah, current? Probably. And I've heard of some people say it lowers your credit score, but I've done all kinds of stuff where I watch my credit score. I doubt that this impacts a lot. You just gotta make sure you got your 90 days of payments, because they're gonna pull it all out 90 days from now, right? If that's part of the deal. Right.
Yeah, I've been hearing stories too about careful on your HELOCs, in terms of potentially getting having them call on your outstanding line.
Yeah, and, you have like 100, 200 grand, they're gonna pull it, right, or decrease it on you.
Just talking to an investor today, and they just said they heard of it happening just to one instance of it happening. So it didn't seem like it was happening. And it also depends on what your loan to value is too, right? I mean, if you're at 50%,
local bank, or
it was mainland, I believe, local investor, but he was talking about mainland counterparts.
Yeah, that's why a lot of people in my mastermind group, they were monetizing those things. They were just pulling the cash. So that once you pulled the cash, they're like, all right, you can go ahead and pull my HELOC, but cash is gone already. It's already in my bank account sitting.
Yeah, so I mean that's the scary thing though. Supposedly this one borrower was called upon it, so actually asked to pay back some of that from that line. I don't know how, but that's what the word on the street was that happened. So I thought that was kind of scary. But then again, it depends on loan to LTV, right? That's probably a big part of it.
The loan covenants, you have to always be at a certain debt service coverage ratio.
Yeah. And underwriting is definitely changing a lot too. It's like pin the tail on the donkey. I mean, moving target from the standpoint of every day. I believe it's something new is changing.
So CBRE is a big kind of broker in the space of commercial real estate. So a couple headlines here. Obviously, there's just a lot of unemployment out there. But one key point here that I thought was interesting, approximately 78% of the total unemployed were reported as furloughed or temporary, indicating many of these jobs could return once the economy fully covers. And then a week later, CBRE came out with a pretty positive headline: rebound expected in Q3 after record drop in employment. And I read a bunch of other stuff that's saying, the second half of 2020 is going to be slow, but we're going to come right out of this 2021. Not necessarily going to be a V, or I don't know, what do they call it, the V or the U-shaped thing? I don't know, but it's things are kind of looking for the positive.
It's good. That's good to hear.
It's only the people trying to sell people on gold that are kind of the perma bears, is what we call them.
And again, that's all regional, right? Because states like Hawaii, who heavily rely on tourism, it might be a different story compared to the national stat rate.
Right. Like, for example, right here, this graphic, we're showing the percent population under statewide stay-at-home orders. It's based on your state, right? This is just the national. I mean, people started in the United States, started coming out of their caves late April, early May. And then as of May 20th, last week of May, for the most part, 30% have kind of released the stay-at-homes. But Hawaii is definitely lagging the country.
Although I heard Vegas is open for business.
Yeah, they're open, I think, today. Yeah.
If we had a tunnel that linked us to the West Coast, I bet you'd have some retirees driving over there right now through that underwater tunnel.
Headline here, U.S. housing markets vulnerable to coronavirus impact cluster in the Northeast and Florida. And a lot of these areas listed are kind of in the New York, more densely populated areas. And the point of the article is just like more densely populated areas are going to be more impacted than the rural areas.
Speaking of Florida, did you hear that the NBA might try to finish off the season?
Yeah. I've been reading that news every day, man. They're 22 team format.
Yeah, in Disney World, right? Or the Florida. When you said Florida, that what made me think of.
We're back, man. NBA's back. We're back.
So the local courts are going to be real crowding up now, yeah.
Oh, I've been playing. We played last weekend. I mean, everybody's playing, even your pickleball friends and the tennis.
Oh yeah, they just started this class. Yeah. Well, I'll have to hit you up later. Maybe come play some ball with you guys.
Common is an operator out there that does residential housing, and they're kind of a big player, but they're making the move towards more workforce housing. And this is an example where I think a lot of mom and pop investors, myself included, we go after workforce housing clientele, the B and C class assets, not the high end luxury, and not the kind of the broke people, super dangerous areas, but kind of in the middle. You're kind of watching what some of the big players are doing. This article is kind of showing some. There's a lot of articles in this report, but it took the popularity of search terms for home for rent in the markets, and they figured out what the delta was, the change in rank. And here are some possibly secondary and tertiary markets to look into if you guys are looking on the mainland. Not saying none of these are really kind of popping out at myself, but that's what you have to do as an investor. You have to look to more secondary and tertiary markets these days. It's not 2012 anymore to look for yield.
Fairbanks, Alaska sounds interesting.
Yeah, that one's probably something to do with some kind of like oil or it's something like that.
Some industries in that spot in that city. Yeah.
Yeah, like Billings, Montana. The population ain't going up there. You don't want to invest there, right? And this is like, as an investor, you have to take in all these inputs, and you have to throw out bad data. And
right.
Some of this might be bad data, but this whole show is about kind of just showing ideas and different sources.
Yeah. And to your point too, these cities could be banking on one big win, like you said, something like oil or the next Amazon regional warehouse is going to pop up there or something like that. But if that was to fall through, then all bets are off, right?
Right. So speaking of all bets are off, so these folks are going bankrupt. J.C. Penney, Neiman Marcus, Lord and Taylor, which is like a really old school department store, and then Tuesday Morning. And a lot of you guys don't really care about those, but maybe you care about Goat's Gym files for Chapter 11 also. So this is always happening. I think every other month we have a big company like this closing, like Forever 21. But with COVID, it definitely accelerates the life cycle of these things.
And it actually just puts them in a better situation because, again, this is a debt restructuring basically, right? For 11. Yeah, so Chapter 11 is a debt restructuring. So you're just cleaning up your balance sheet basically, and you're getting, it's like debt forgiveness, right? They're gonna, in order for you to survive, they're asking, okay, we have too much debt, so how are we going to restructure it? And priority is going to rule out, and there's going to be some losers on the creditors side. So it kind of sucks being them, but these companies are gonna be alive still. It's just the creditors that actually that are going to get screwed.
Right. God bless America, right? You can go for it and you can strike out and you can hit it again. Whereas different countries, you're out. You don't get.
Didn't they say Trump has filed for bankruptcy more than once?
Yeah, but everybody files for bankruptcy, right?
It's a strategy.
Yeah, that's why you have multiple LLCs. You put your you take your lumps in one, and you fold up that one. But everybody else, all the other LLCs are going good.
Right.
It's one of those YouTube headlines, right? But then when you really look into it, it's like, oh, that was smart. That was
part of the game.
Part of the game
system, right? You got to learn how to play with the big boys.
Right. So this map shows America, and the darker squares are the more impacted states, which are the percent of adults in households where someone had a loss of employment income since March 13th. And looks like Hawaii is one of the darker ones in here. A lot of West Coast impacted here.
New York, New Jersey.
John Burns is a pretty good source of real estate investing information. So they had 4 big takeaways from this last go around of surveys. New home builders should capture the pent-up demand from apartment dwellers, possibly looking to get some bigger space. I know, you helped us sell our little condo that we were living in, and thank God.
Good timing.
But potentially the marriage would have not lasted if we were stuck in that little place.
Good thing you got buy-off from the spouse and the in-laws. That's the main thing, right?
We'd still be stuck in there. So John Burns is saying, new homes are, there's going to be some captured pent-up demand because people are like, we're living in our little New York apartment, but we can't even visit all these cool places because we're stuck inside all day long. Apartment renters may move closer to jobs where businesses are hiring. Some may double up in larger units, while others will look for more efficient spaces at lower absolute rents. Those are single-family home rental landlords. Single-family home rentals allowing financial flexibility and privacy with enhanced social distancing opportunities. And basically, people want space, right? So people are looking to kind of spread out a little bit.
Right.
To me, the play is mobile home parks. People may want space, but they can't afford a single-family home house or to
So
buy.
it's something recession proof or.
Yeah. And then commercial real estate is just, taking it on the chin, right? Nobody's going to go to shops, and office space is really struggling too. Here's an article on development. Development's down. Normally there's about 300,000 units coming on every year, but with the pandemic and slow orders, it's going to be $250,000 or 1,000 units coming online, which means if you're a developer and you're able to get your project pushed through, you've got less competition out there. So this is like anything, you're mentioning the small businesses out there struggling. I mean, this is just part of life, right? This is where you trim the fat, and you see
Right.
which are the strong balance sheet business operators out there.
And this is something too that might counter, help us reduce the softening of the residential real estate market too, right? In terms of less inventory coming up for sale, so that might help us, retain prices potentially.
So this is something that I was what I was a little stressed out these past few months. Like, are my tenants paying my rent? The collections for May sort of came in, and you got to really you see a lot of these headlines and they'll take it throughout the month, but really to get it right, you got to look at it the next month on the past month. So when it all was said and done, collections were about 93.3%, which was still pretty good. This is a 1.5 percentage point decrease from those going from April to May. So I know across our portfolio of over 3,000 units, normally we'll collect about 97% of the rents. 3 out of 100 guys will, they just won't pay. And, or, you have partial collections equating to 97%. April was maybe brought that down a couple percent points. And then, May was a little lower than that. But a lot of our deals are underwritten where as long as we keep that thing occupied and people paying at like 65, 70%, we're making money. So I think that this shows the resilience of workforce housing, and why you don't invest in areas where there's really, really strong landlord laws against or really strong tenant laws against landlords. The one takeaway I had, and this little graph in purple kind of outlines that, it's the Class C properties and worse that are really struggling the most, where the collections are the worst. And the driver is people in that lower earning range. They just don't have the savings, and a lot of times they're kind of the first to get cut. All your rentals are paying? You guys are renting?
Yeah, for me, I'm pleasantly surprised. April and May have been pretty solid. I haven't found out for June yet, but I'll hopefully be hearing the next few days of how June is going. But yeah, April and May were pretty good. I think I had mentioned it the last time was actually my one problem tenant was actually locally on Oahu, but that was an issue that was persistent from before COVID, and that's related to like some Section 8 issues. So, but overall, up until this point, I'm pretty happy with how my collections have gone so far. So yeah, and this is for all the different states: KC, Illinois, Nevada. It's all been pretty solid.
Cool. Well, you got more B class stuff, right?
Yeah, B plus. Yeah, a little bit. Not, I wouldn't say. Well, you talk about the C. That's more the local stuff, but the mainland stuff is a little bit better. Yeah.
Yeah. To me, the Class C in Hawaii is still better than Class C in the mainland. Just the clientele, quality of tenant.
Yep. Agreed.
So here, National Real Estate Investors also kind of says the same thing. Outlook for Class C apartments is muddied by tenants' loss of income. And I just closed a 140 unit Class A apartment in like Dallas, Texas, a couple of days ago. We got a HUD loan on that, 35.5-year amortization period, a total of 2.9% interest rate. So,
wow, that sounds
and if
nice.
you're available tomorrow, we'll go eat. You want to go Yanagi tomorrow?
Yeah, that sounds fun.
Let me know.
Yeah. Okay.
I gotta get an oil change.
Okay. And
And
those commercial ones, what kind of What kind of balloon are those?
10-year term.
10-year term. Oh, okay,
Yeah,
cool. That's
because
pretty good.
you don't really want to go anything with like 8 years or less, in my opinion.
Right.
Because that's what's bridging you to the. You don't want to be forced to refinance or sell in a downtime. Hopefully, in the next 10 years, we'll be able to. I mean, we probably want to be able to sell that thing in 5 years from now at a great price. But we got 10 years to sell it at the right time, or maybe we refinance.
Yeah, and
But
qualifying for the HUD is getting you that low rate.
Yeah. The HUD is like, like all the Fannie Mae, Freddie Mac stuff, the non-recourse debt. I mean, they're great loans, but the HUD loan is just another level better. But the problem, it takes like 4 to 6 months to originate. So we've been working on this one since like October, November last year. I almost forgot about this one.
Too much on your plate, man.
And then a little bit of good news. Papa John reports May as best sales month in restaurant history. Good for Papa John's. But yeah, anybody's got any questions? We have a few minutes to the top of an hour. You guys can type it in. But if not, Dean, you got any parting words for the folks?
No. Anybody else is free for Yanagi for lunch, then yeah.
Let us know.
It's got to be less than what, 10? Is it 10?
Yeah.
I think everyone's setting their own guidelines too, just to let everyone know. So it's good to contact whatever restaurant you're intending to do. Because for us, we're planning a Father's Day brunch over at one of the restaurants, restaurant Santori. So a great restaurant, I must say. But they have their own guidelines and limits based on if you're all in one household or not, and that also determines the limitation. So be sure before you go out for these gatherings, if it's like kind of a bigger one, to reach out to that individual restaurant to see what their individual policy is, because it might be a little stricter than what our guidelines are or the law. Yeah.
So there's no questions thank you.
Thanks everybody.
We'll catch you guys next week. So yeah, Yanagi at 11. Maybe you guys let me know if you guys want to come. All right.
See you guys. All right.
Free real estate investing group. Check out reialoha.com.
We're just two local guys with so much to say. So listen to the real estate Braddahs today.